Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, May 19th, 2021, and I'm pre-recording this Trading Places Live for Thursday, May 20th. Well, it was a rough day on Wednesday. Taking a look at futures as we look ahead to Thursday. Well, we had some earnings news after the bell, and we're going to get into that in just a little while. But we do have futures turning lower again. We've got the Dow Jones futures down 89, the S&P 500 down 9.5, and the NASDAQ down 42 3/4. We'll see whether or not that carries over into the morning hours. But at least currently, it looks like the NASDAQ maybe we'll see a little bit more weakness in the morning. But again, we'll just have to wait and see how things play out overnight. Rough day today on cryptocurrencies. Very, very volatile action. Talk about that a little bit as well. But first, let's take a look at the agenda for today. We're going to get into that daily market recap, talking technically. Want to talk a little bit about the sector performance there. Then we'll have a little roll on options expiration, or little segment on options expiration, I should say. Very interesting. And from a trading standpoint, I think there are a lot of opportunities to get set up the week of options expiration. So I'll go through some of that with you. Then we'll get into the earnings spotlight and wrap up the show with the 3 you must see. Before we get into any of that, let me take you over to earningsbeats.com, where you can sign up. All you need is a name, email address. Hit that subscribe button. That's our free Earnings Beats Digest newsletter. It's published 3 times a week, Mondays, Wednesdays, and Fridays, normally in the morning before the market opens. There's no credit card required. It's completely free. Give you an opportunity to get to know the way we look at the market. I think will help in your trading and investing. Moving on to the action on Wednesday, it was a pretty rough day in the market. We did come off of the earlier lows, but the Dow Jones Industrial Average still did finish down 165 points, or roughly 0.5%, testing the 50-day moving average and also that recent low from last week. So pretty good reversal off of that. That was good news. S&P 500 did the same thing, printing a nice little hammer. We have now tested the 50-day. We've tested the recent low. We're getting close to the center line. So it's possible we could reverse back to the upside, although I still think maybe we see a little bit more weakness in the short term. The NASDAQ finished down just 4 points. So on a relative basis versus the other major indices, it performed best, which was interesting because it actually opened up worst. Big move down at the open, but there was a hollow candle. So we saw a lot of buying throughout the day. That's typically a pretty good sign. But like the other indices, I'm not sure that the selling is over just yet. We're into the rough period of the calendar month. 19th to the 25th is typically when we see a little bit more weakness. So I'm not sure that we're quite through the weakness at this point. And with futures pointing lower, that would suggest maybe we have a little bit more selling ahead. We'll have to see. Mid caps, small caps, also weak on the day, also rallying off of their earlier lows. Mid caps did test the prior week's lows. Small caps actually did not get down quite that far before reversing, but both of them are still below key moving averages. So we need to see that reverse. Looking at the individual sectors, technology, best performer today, and communication services, those two were the only two in positive territory. Both opened lower, but rallied back very nicely and finished fractionally higher for the day. Energy, and before I go further, look at the volume there on the technology ETF, and look at that move up in the AD line because of that strong hollow candle. Very good action there. Energy pulled back. Energy's been strong of late. Not too surprised with options expiring that we saw some weakness there, along with materials. Those were the two worst areas among the sectors. And then industry groups, aluminum losing more than 9% on Wednesday. But again, anytime you get an area of the market which has gone up quite a bit heading into options expiration, you do need to be careful. Got a segment. I'm going to talk about that in just a bit. Moving on to the 10-year Treasury yield, we have initial jobless claims coming out Thursday morning. Last week, we had 473,000. This week, we're looking for that number to drop to 460,000. May Philadelphia Fed Manufacturing Index, 45 is the estimate, 45.0. April was 50.2, so we're looking for a drop there. and also looking for a drop in April leading indicators. March rose 1.3%. We're looking for April to rise, but only 1.2%. So not quite as strong as we saw in March. Looking at the yield chart, you can see 150 to 175 is that range. We'll see whether or not we break out to the upside or break down to the downside. I believe we're going to break out. I think probably over the next few months, I'm expecting maybe a run toward that 2% level. I think 190, 195 could be an area where we see a little resistance, but we got to get through 175 first. So that's what we're looking for. We had that negative divergence on that high. We did pull back, got the 50-day test. We've seen the PPO center line reset, and now we're starting to turn back up again. So if we do break out, I think we'll see a continuing push to the upside. Financials and industrials tend to do well when the yield's been rising, and for the most part, you can see that correlation just simply looking at this chart. But recently we saw, just these last couple of days, movement to the upside in the yield, and the financials and industrial areas both moving lower. I think some of that has to do with options expiration. I don't think we're going to see an inverse correlation develop. I think that we will continue to see positive correlation here, but I do think there's a short-term issue with options expiring. Again, I'll get into that in just a moment. Moving on to talking technically. I mentioned this morning we opened a little rough on the NASDAQ versus the spider, but we rallied back stronger. And really, when you look at the last 5 days, and this is the QQQ relative to the spider over the last 5 days, I think you can see from the low that was posted back on Monday through the high on Wednesday, we're definitely trending higher. So even though we opened lower today, we saw mostly strength in the NASDAQ relative to the S&P 500 throughout the trading day. So futures looking like probably going to open lower again tomorrow. And right now, at least, NASDAQ looks to be a little bit weaker. Maybe we see the same thing. That would make sense given options expiration. I will talk about that in just a moment. IWF versus IWD. This is growth versus value. I want you to see this ratio because it looks almost identical to the NASDAQ versus the S&P 500. So same thing, trending higher the last couple of days, money rotating back towards growth. But many of those growth stocks, especially those that are optionable, have a lot of in-the-money puts because they've been weaker, whereas we see a lot more of the value stocks with in-the-money calls. And so as a result, we're seeing a little bit weakness as we head into options expiration. Maybe I can illustrate that a little bit better just by showing you the sector summary. So here, and you can see the scooter. This is the StockCharts technical rank. This is just today's action. So this is Wednesday's action. And look at the leadership and look at the scooters. So you got technology, communication services, utilities, 3 of the weaker groups. And then you look down here at the bottom at the, well, when I say 3 of the weaker groups, I mean 3 of the recently weaker groups. Obviously, they were the strongest groups today. But then you go down to the bottom and you can see the higher scooter scores. So these are all areas of the market that have been performing very well, and they were the ones getting hit the hardest. I go through this a lot throughout the options expiration week and in even the week following. But this is all very typical of what we see in options expiration week. What's been strong tends to struggle. What's been weak tends to rebound. And that's what we saw on the sector leaderboard. Another way to look at this, we have our relative strength looking at the industry groups. And if you look at today's strength, the groups that were outperforming the S&P 500, it was the DWCREE, which is renewable energy, semiconductors, travel and tourism, toys. These are all groups that have been struggling of late. As we go into options expiration, anyone that's been trading those put options struggled today because a lot of those areas of the market rebounded. If we flip this and look at the bottom of the ranking, you can see aluminum, non-ferrous metals, and then a few of these energy areas, some of the oil industry groups, really weak. And this is where we've seen the strength. So always important, especially as a trader. You know, if you're in this for the long term, options expiration week doesn't really matter. But if you're a trader, you have to be aware of some of these things that drive the stock market in the near term. That just helps to point out some of that right there. Let's keep moving on now. I wrote an article yesterday talking a little bit about this options ordeal. And in this article, I was referring to AMC, which is AMC Entertainment Holdings. And just the fact that the stock had run up quite a bit and had a lot of in-the-money call options. So let's take a look at this and see what we've got here. So this was the options table, and this came from cboe.com. This far left-hand column over here are the open calls. So it's open call interest. And the far right-hand column is the open put interest. Now, AMC was trading up over $14 a share at the time I wrote this article. In fact, the chart is down here. It was at $14.31. And you can see it was challenging overhead resistance. But what made this more unlikely, never a guarantee, it could have broken out, but what made that breakout less likely was the fact that we had a ton of in-the-money call options. So look at all of these outstanding call options. Now, I just eyeballed it and figured there were probably about 150,000 contracts, which is the equivalent of 15 million shares that were, in a position to benefit as options expired on Friday. But a lot of that value is lost if the stock pulls back. And when you look over on the put side, when the stock was at 1431, we only had about 5,000 contracts in the money on the put side. So just think about that, 150,000 calls on one side and only 5,000 puts on the other side. It was in the market maker's best interest to drive prices lower over the next couple of days to wipe out many, many more of those 150,000 calls. And as they start moving lower, then you'll see more and more puts getting in the money. But as I pointed out in our Max Pain webinar to members on Tuesday night, the Max Pain, the point at which the value of in the money puts equals the value of in the money calls, that point was down at around $11.30. And we were at $14.30. So you can imagine, the risk that you would be taking by being long this stock heading into options expiration. Well, let's get an update, and I want to show you what happened on Wednesday here. Here was the move to the upside to about 14.30, and look at what happened. We closed at 12.64. We were down 9.91% Wednesday. Now, some might have said, well, it's just profit taking, or some might say, well, selling at resistance. I'm going to tell you, I think it had more to do with options expiration than anything else. We had tremendous volume that was coming into the stock, couple 100 million shares a day. And then one day we get 88 million shares and we fall all the way back down to that level. I don't know why that's coming in with that chart style, but let me give you a different look at this. So look at the volume. See that push to the upside, and look at all that volume coming in. 300 million, 200 million. Then all of a sudden, one day we have 88 million, much, much less, and the stock drops 10%. And it's happened to many stocks. I mean, I'm going to pull up one other one here. Actually, I'm going to show you Freeport Mac brand. Before we get into that, I want to show you a couple others that I talked about with our members. Mosaic, MOS. So not looking for a huge pullback, but do you see that false breakout right there? There were a ton of in-the-money calls on Mosaic. So we actually saw that stock pull back. And I mentioned to our members on Tuesday that I actually shorted. I don't short very often. Very rarely in a secular bull market do I short. But when I see a stock that fails to break out and it's got so many options on the on the call side, I just expect that we're going to get that pullback. Now, we lost about 3% on Mosaic on Wednesday. I wouldn't be surprised to see a move back down to around 33, 34. So I still think there's a little bit more downside, but taking profits along the way makes sense. Another one kind of along the lines of Mosaic is Steel Dynamics. Huge move up. Stock was as high as 66 and change, close to 67, a little over a week ago. And just on Tuesday, we were up near $65. Came down and hit 59.92 today. Lots of in the money calls. And so lesser volume, and we see a pullback. Now, the one I'm going to feature here and I want to go over with you is Freeport-McMoRan, FCX. So first, let's look at the chart. Now, this thing has just been on a roll, just on fire, continuing to move up all the way across the chart here for the last year. But you got to be careful because middle of January, we made the big move up. First half of the month, what happens into option expiration? We go down. Late in February, we ended up going down. How about middle of March after moving up near resistance? We moved back down. How about in April? Get up near top, near options expiration, we moved down. Then middle of May, we're moving up near a high and options coming up this Friday. And what happens to FCX? We dropped 6 2/3% today on some pretty heavy volume. Now, the interesting part with FCX is here I'm over at cboe.com. So I want to show you this, how this sets up for FCX. So these are all the calls and puts that are expiring this Friday. And so here are here's your open interest on the puts. Here's your here's your open interest on the calls. There's your calls. And then here's your puts. And so you've got your open interest right here on the puts. Now, the stock was trading at $45. Go back and look at that chart again. $45 at the high on Tuesday. Look at these options. Now, above 45, that's how many, these are the puts that are in the money. So if you're bearish FCX and you're buying puts, you expect it to go lower. With the stock trading at $45 yesterday, there was almost nothing in the money. I would say maybe 1,500 contracts. Look at what was in the money on the call side. At 44.50, 2,200. At 44, 7,300. At 43.50, 1,000. At 43, 7,000. At 42.50, 5,400. At 42, 73.95. Keep dropping back here. Look at this. At 40, 18,000. At 39, 16,000. At 38, 19,000. At 37, 9,000. At 35, 24,000. Let me just tell you how much value just this one strike price on one stock, how much this is. So if you're at $45 and your strike price is $35, you're $10 in the money. 24,000, let's forget about the 500, just say 24,000 contracts. 24,000 contracts are the equivalent of 2.4 million shares. 2.4 million shares, $10 in the money is $24 million. That's the value of these calls just at one strike price. So imagine how much money is at stake here on FCX. Oh, by the way, there's another 6,600 back at 27, 5,100, 28, 6,100 at 30. I mean, it just goes on and on. The amount of money, the amount of in the money calls on FCX was astronomical. The amount of puts was almost nothing. It was negligible. So you look back at the chart and you see, oh, we went down 7%. I mean, if you're just looking and you know nothing about options and options expiration week, you would just say, oh, it just pulled back to its 20-day moving average. You know, nothing major. But notice where all of the selling always occurs on FCX, right around options time. Get these nice pushes to the upside, and then we can't sustain it into options week. Why? Because market makers have a ton of money at stake. I mean, if prices go higher, they don't get hurt, because if folks keep buying calls, market makers sell the calls, but then they go and buy the stock. So if it's heavy volume and it keeps going higher, it's because market makers are buying to offset all the calls that are being bought. They're not losing money if the price keeps going up, so don't feel sorry for them. However, if they are on the long side to protect themselves against all of these calls that are out there, and right around options expiration, they sell their shares Remember, they own stock. So if they start selling the stock they own and then short additional stock, they make money three ways. They make it on the long side on the way up, they make it on the short side on the way down, and they also reduce all of those millions of dollars of call premium. It's like legalized thievery. That's kind of what I call it. But you got to be careful with market makers come option expiration time. So I wanted to kind of take the, use FCX as kind of a case study, because I just saw today how many calls were outstanding. I wish I had seen this one on Wednesday, on Tuesday when I was looking for members, because this would have been a poster child for a stock. You definitely think about this. Let's say you're trading and you're thinking about going long FCX. That information about the options is incredibly important, because instead of buying at $45, if you wanted to buy the stock, if you look at those options, you would say to yourself, this stock probably is not going to go any higher. And if it does, it's not worth the risk. And so I wouldn't have placed that long trade knowing this information. And it would have saved already $3 a share, or $5, $4 from $45, the open from back on Tuesday. So you want to pay attention to options expiration. All right, let's move on. How about earnings? So earnings spotlight after hours tonight, we had Cisco coming out. Cisco beat estimates 83 cents versus 82 cents. Stock is down 5.5% after hours. So a couple bucks, probably looking to move back down close to the 50 area. Looking longer term, let me pull up a weekly chart and see what we got here on Cisco. Cisco's been a pretty good performer. It did get close to that overhead resistance from back in 2019. So that could be part of the problem. And on this weekly chart, you can see the rising 20-week moving average is down at about 49.25. So I wouldn't be surprised to see a move back down there. I would be looking for Cisco to bounce off of that. So if we do open tomorrow and we're down, say, below the 50 level, this would be a stock that might recover into the close. Now, I didn't look at options. It has been moving up steadily, so maybe it does have a little bit of options difficulty. But, just looking at the chart itself, I wouldn't be surprised to see a bounce off of that rising 20-week EMA. All right, next up, let me go back to that chart again. Next up is SNPS. So this is Synopsys. And this is in the software area. Stock has not been particularly strong after topping back in mid-February. Moved down to put in a pretty important low around 220. Had a little bit of a bounce and now is in this trading range and trending below the 20-day. It is up 1.83% after hours. Excuse me. The stock beat on its bottom line. So the market was expecting $1.52 in earnings, and they came in at $1.70. So maybe we can get back through the moving averages. I think close back up over 240, 245 would be good. Until then, I would probably expect continuation to the downside, back down to maybe that 220 area. But heading into options expiration, it might benefit the market makers for this one to actually be a little higher. So maybe we'll get a little gap up, push toward 245. At that point, I'd be a little more careful with the stock. Next up, Copart. Copart easy beat on their bottom line, $1.09 versus 80 cents. They're up almost 3% after hours, which would take the stock back up close to its recent high around 125. A lot of overhead resistance, though, between 125 and 130. So it's going to need some more buyers tomorrow to break out. Keysight Technology, KEYS. Keysight, huge move into February, and since then we've just been consolidating. Sideways action, highs 155, lows down around 132. They came out, they beat their earnings estimate 144 versus 134. Stock was down about 1.5% after hours. So still looks like it's going to open in this trading range. I would want it to hold, though, 130 to 132 to the downside on any selling. L Brands, let's see. This is the company that owns the Victoria's Secret brand. And the stock has been, pretty good performer throughout the year. AD line's been strong. Relative strength's been strong. They did come in and meet, not beat, but meet expectations at $1.25. So they were unable to beat the expectations. just matching instead. The stock down 2.3% after hours. I'd be a little bit more concerned on this stock if it loses about 62, 63. So watch that level of price support, and also the 50-day moving average at 64. So a close below 62, 63, and you'd be losing that 50-day as well. We've only done that once right here back in January. We've only done it once since all the way back into June of last year. So L Brands could be under a little pressure if we see more selling tomorrow. ZTO, they actually came up a little bit short on their estimate, 14 cents versus 18 cents. Stock up 4%. I mean, that's the kind of market we're in right now. Stocks come through with big beats. They go lower, they miss, and they go higher. Just crazy the way the market works sometimes, and the way the rotation has been working in this market for the last several months has been a little bit insane. But anyhow, I think the stock, if it does move up 3-4% tomorrow, I expect it's probably going to have some difficulty around 33, trying to get through that level. If it can get through it, then it might have a shot to maybe move back up toward these major tops around 38, 38.5. The big support area on the stock is down just below 27, maybe 26.5. All right, let's move on. We're going to wrap up the show with the 3 you must see. First up, I'm going to bring up KMX. So these stocks, I think, are stocks that we want to continue to keep an eye on. But I think that maybe the character of their chart has changed. So CarMax is a stock that clearly was uptrending. So we put in a nice high here in January, pulled back, another new high in March, pulled back, and then another new high in early May. But you can see it was on pretty light volume. Not really, it just seems like maybe it was running out of gas. And then look at the volume pick up on this selling. We came down in 5 days to test the lows that we saw all the way back in January and February. Bounced, light volume, and then look at the selling pick back up again. Volume picks up, and we lose support. This was the lowest close on CarMax since all the way back in the middle part of January. So while you can always get a 20-day test back to the upside, it does look like this one is trending lower. And I think it's got a shot maybe to move back down into this gap support area between about 107 and 109. That's what I'd be looking for on KMX. CNX, this is another one that I think has kind of lost its mojo. Clearly in an uptrend, pulled back, had tested the 14 level on multiple occasions, and then look at the volume today pick up, and we closed down 1366. I don't know. It just looks like with the stock already at a 52-week low relative to the aluminum stocks, it really wasn't performing as well as some of the other aluminum stocks. And then breaking down today to about a 3-month, 2.5 to 3 month low, that does not bode well for CNX. And then for a final one, I thought maybe what we do is just go to the S&P, and what was the big loser on the S&P today? Let's see what we got. Well, that was FCX. We already looked at that. How about TJX? So that would be TJX companies. Nice move up. See this double top? We broke out above it. Should have held it on the way back down. Failed to do so. Failed to hold the 20. Failed to hold the 50. And this was on earnings. So this was a heavy volume breakdown. I think, again, watch that 20-day to the upside on any bounce. But I think in time, this stock looks like it probably could be heading back down to test 62. All right, that's it for me. I want to thank everybody for tuning in. Appreciate it. I will be out the rest of the week, but next Monday, you can catch me again over at Earnings Beats for your next Trading Places Live. Have a great weekend, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.